Okay, so today is the 20th of June, and let's start with our market review. Well, first of all, let's take a look at the cryptocurrencies, starting with BTC. I've decided to go back to trading view charts, and I think it is the right decision overall because unfortunately interactive brokers are not able to provide the same quality of charting, and so here we are. And let's start with the assessment of the long-term picture here. We're still into these global cycles in BTC, and right now it is trying to consolidate near the all-time high, which could be followed by this period of rapid price appreciation as it was before. But I think we should also keep in mind this ascending line, which is well defined and confirmed by price action. We are looking at it through the weekly time frame, and I think it's safe to conclude that the market respects this line, and we could also extrapolate it into this rising uptrend, a bit similar to this one, defined with the green lines here. So right now, this consolidation here could be eventually resolved into the next iteration and formation of this all-time highs and subsequent global long-term consolidation. But I think there is a good chance that if something hits on the macro front, or maybe we will hear some bad news about, I don't know, inflation or something else, maybe some political instability and stuff like that, we could spend a bit more time here, and even this time frame could become longer. It could be something like that. So that is a good thing to keep in mind. And right now we're seeing the news that Bank of England is keeping the rate at the same level as it was before, 5.25, and this is a bit concerning for me personally, because we've seen, well, it is to be expected, but nevertheless is concerning. We see that central banks all around the world are out of sync, and of course it's mostly it is result of deglobalization and rising international tensions. But right now we're seeing this quite weird picture where Canada is lowering rates, European Union is lowering rates, and UK and the US are sort of wait and see, which is not so usual. And when the international monetary policy is becoming more fragmented, the markets become more fragmented and bifurcated. So volatility is the norm right now. And with that being said, let's take a look at the dailies. The dailies, actually, it's not so bad. And this potential breakdown and retest of the ascending trend line, which is very visible at the weeklies, is not a guarantee, because this can be resolved, for example, to the upside. And actually right now we're seeing sort of this very a bit of a bottom fishing, but nevertheless viable buy point here. Maybe it could look like this, and the total risk is 4%. Of course, it could be even better if you buy it a bit lower, like the previous day, maybe something like that. But it is not a problem that if you miss it, because eventually it could resolve into this consolidation with a good buy point, similar to the ones we got here, 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 and here. And this is going to be an interesting period. The magic of the moment is in the buy point, is in the proper buy point, because for me personally, it's a good idea to try to catch this potential move, but you don't want to be to take some excessive damage to the capital in the process when the stop losses are getting triggered. So this is a delicate balance to implement. So I think that's it for Bitcoin for now. ETH is a bit better. To be honest, I'm not following it that much, but maybe I should, because it still has these better relative moves, percentage moves. So there is more potential for upside here, especially when we are swing trading, sort of from a couple of days to a couple of weeks. So potentially interesting picture, and we see that relative to its position against the moving averages, it is stronger right now. And we also see this small undercut here, which could be potentially viable, but it still has to consolidate here. I think that the ETF theme here is coming to conclusion. So this is the reason for this relative strength right now. And Solana is the weakest of the leaders. I'm going to be expanding my scope in cryptos in the coming days and weeks, so we'll see if there are more opportunities there. Okay, let's switch to the markets right now. So the indexes are weird too, because the index itself is very concentrated, maybe over concentrated, not maybe, it is over concentrated in a couple of names. Of course, the main of these names is Nvidia, which is looking a bit excessive right now. This is a sign, this is an artifact of the split, but it still keeps marching up. The only difference between this stock and the ones that were prevalent during the pre-dot-com crisis events is that this one is actually producing the relevant product, namely the chips for AI and for mining, and basically for anything else that requires some powerful compute. As of real topping signals, right now we saw this is one of them, the split. But given the unique fundamental situation, it could handle few more splits. And why splits are bad? Splits are bad because each split brings more unqualified players in the stock. I mean, unqualified not in terms of professional certification, but this is just retail trading, so-called dumb money. When the theme becomes a commonplace and everybody knows about the Nvidia, and you start hearing tips about Nvidia stock from, as they said, in the previous century from the shoe cleaning boy or the waiter in the restaurant, it is usually a preceding stage to the final distribution of the stock by the institutions, by institutional money. So definitely not an ending, but you should keep in mind one important thing. When Nvidia tops, there will be no, with a few exceptions, and all the other chip stocks are not that powerful. They will not be able to hold indexes. And when Nvidia tops, it is going to be quite painful, I think, because overall market is quite weak and fragmented. And when Nvidia tops, it will inevitably put some pressure on all the other stocks out there. But there is also another scenario in which maybe Nvidia tops, but the new wave of liquidity, of money, will not be motivated to leave the market. So it's going to disperse through names of other scale, and maybe the fundamental theme behind it could be built around AI narratives as well, because okay, so we have Nvidia builds chips, we have OpenAI, which is private at the moment, and we also have several other companies which are building AI solutions and implementing them almost everywhere. And at some point it should also be useful for the small guy, for the companies which are represented in the IWM, for example, the small caps, or maybe MDY, the mid caps, because they should feel this productivity boost, this AI-driven enhancement of their capabilities. And this could also very well coincide with the final decision by the Fed to start cutting the rates. And maybe it could also be fortified by the presidential cycle in the States, which should start to be noticeable in the markets in the coming weeks and months. So what else should we take a look at? Yields are not in the uptrend, at least at the moment. Yes, it's not a capitulation, which is favorable for the market, for the equity market, but at least they are not showing the excessive strength. And ideally, the 2-year will follow the 10-year with this downside momentum. Okay, so what else? Let's discuss some ideas. I have some positions, and which I'm not going to show you, but there are maybe it's feasible to cautiously suggest that the overall market is improving, mainly because the situation in QQQ is starting to resemble the situation which was created shortly after this COVID breakdown. QQQ stayed above this long-term ascending trend line for some time, and this was the most fruitful part of it. So maybe we're seeing something like that, and maybe this is a positive scenario, and maybe once again we're seeing that liquidity is starting to disperse in this market more evenly. So one of the ideas here could be Bluebird, very powerful move from well, not 100%, but close to that. This one could be considered. I don't know the team. I don't know what's happening there. So they make buses. Maybe they will make AI electric buses right now. Maybe that's the thing. Coinbase is looking not so bad. Of course, highly correlated to Bitcoin, but could be viable maybe somewhere here if it tries to go up. What else? Select medical holdings, another powerful move. Short consolidation could be potentially viable. On innovation, this one I missed. It is here by a mistake. KSPI tried to move out, but you could consider this to be still in a buy zone, given this relatively small risk here. And another new name is GMI. Also this gap, but this is not as interesting as Select Medical Holdings. Even more jagged, personally, to me. Needs more time in my assessment. So to summarize, we're in a ambivalent and a bit fractured global rates environment, which is not good. But at the same time, we see power in the indexes, which you could discount on the dominance of Nvidia. And there are basically two scenarios. The first one is Nvidia topping and the market topping as well, and this move above this trend line is short-lived and we will capitulate and stuff like that. Another local bear market, or it could maybe pass the baton to the small guy and to the medium guy, and this environment could be quite fruitful and resemblant of the one which we had here after the COVID. In terms of crypto, it's sort of similar. If we will see some positive confirmations, maybe around inflation, it is expected for the BTC to reconsolidate and post new highs in the coming weeks. If we will see some bad news, perhaps related to dollar losing its ground as the only and major payment currency of Saudi Arabia in terms of oil trade, maybe we will see it retreat here, test this line, and maybe try to pull off something later. Okay, I guess that's it for now. Stay tuned.